Hey everybody, welcome to my trading game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. And as always, I remind you, Bitcoin is doing its thing. Stocks are doing their thing. For us, all we care about is the price action in the charts. You can have your long-term views, but again, everything I do is based on probability, which gives us the clearest view, unbiased view, no BS view of where the markets and stocks, crypto, commodities are going. So we're going to get into it here, folks. I got lots to talk about today. Let's first and foremost start off with the S&P futures, as we always do, right? So here's the S&P futures, and you can see that from yesterday's close, we're fractionally positive. So really, it's another very quiet day. And I want to reiterate that, right? So yesterday was very unusual, and I'm going to tell you why. Friday, we had that jobs report. The markets gapped higher. We saw the big reversal to the downside, heavy institutional unloading. And then Monday came and everything was quiet. It was almost like you could hear a pin drop in the markets. Markets were extremely quiet. Volume was light. It's as if the institutions vanished. Now, whether or not that was because they didn't have enough volume to unload into, we don't know yet. We have to wait for the CPI data. In fact, today at 10 a.m., we'll get the jobs data revisions for the last multiple months to see if that's basically weaker or stronger than the data has told us thus far. But really, at this point, it's all about PPI tomorrow and CPI on Thursday. Those are the big ones because that's going to tell us whether we have stagflation or not. All right, so we have right here a market that is fractionally green. Again, I'm putting my mouse right here, showing a line of where the break even for the markets are. That would be, again, you can see we're just slightly higher on the day. Overnight, we did trend up a little bit, and now we're trending back down just a bit. Now, I wanted to show you the S&P. Now, I show you this chart every single day, but I added in the RSI today. Now, the RSI, for those of you that don't know, it stands for Relative Strength Index. And essentially what you're looking for is something overbought or oversold. Above 70 on the RSI is overbought. Below 30 is oversold. But by itself, that actually does not tell you anything. It's not like you short a stock because it's above 70 or you buy a stock because it's below 30. I've seen RSI stay well above 70 for long periods of time as stocks continue to go up, and same thing, continue to go down below 30. The key is the divergence. Are you seeing a positive or negative divergence in the chart? So let's go over this. So first and foremost, we have our wedge pattern up here, right? And we can even minimize this just a little bit initially so that we can really zoom in on the wedge pattern, right? You have your underbelly trend line right here. We have our overbelly kind of above ascending trend line there. And price is holding miraculously still inside of this wedge. But what do we know about wedge patterns? They eventually come to a head. And the tighter they become, the more likely price must break to the upside or the downside. Now, the question is, well, which way will it break? In general, when looking at probabilities, and remember, no BS, just charts and data here at Verified Investing, if you looked at 100 of this sort of pattern, you would find that about 70% of them or 70 of them would break to the downside. Now, 70 is a good percentage, right? If you can win at anything 70% of the time, you're doing pretty well. But again, it's not 100%. And so really, we want to look for ancillary other factors out there. And one of those factors that's catching my eye is on the RSI. And the RSI, again, when you start to see negative divergences, to me, it spells weakening sentiment within the institutional crowd. In other words, unloading. And we talked about that on Friday where we saw that. And essentially what we see here is that you have a high, a higher high, and basically you gapped up to a higher high yesterday before, or 2 days ago on Friday, before reversing. But look at the RSI. The RSI continues to trend down. And that, again, my friends, is where negative, you would call that negative divergence, where price is going up, but the RSI high pivots. As price makes a new high, the RSI makes lower highs. So higher highs versus lower highs. And that, again, is a signal that I pay attention to kind of add credence to the wedge pattern that it favors a breakdown in the chart. All right. So again, using RSI. And again, by the way, I don't know if you guys tune in every morning, but before my show, we have another show called the RSI Trade of the Day. It's my head trader Ben's show. And every day he goes through a setup using RSI for that day. It's literally actionable for that day. It's a no-brainer if you have another 10, 15 minutes. It literally starts at 8:45 and goes basically up to 8:55. And then 5 minutes later is the game plan starting. So if you guys have time, tune into that. It is a no-brainer for not only education, but again, a great alpha trade setup every single day. All right. So we have this negative divergence. Let's see if it's also on the chart of the QQQ. And what we can see here is, take a look at this, guys. So the QQQ, you have a high, higher high, but then a lower high. So how do you look at this? You do have a higher high and a high right here, right? So there's a higher high right here, but then it basically flatlines out. Now here you have the negative divergence, and here you have a lower. So this is following accurately with what you'd expect, right? You're making a lower high and you're making a lower high on the RSI, but you do have the negative divergence here that was building, that was telling you that that signal was in there. And so this still has negative divergence. It just, the only difference is it's already on the stock price making lower highs than where price was a few weeks ago. So again, interesting to see that you have negative divergence on the S&P as well as on the QQQ, the NASDAQ, even though sentiment amongst retail investors remains extremely, extremely high. All right, flipping over. And by the way, guys, you're probably seeing a new trend line on the Qs. Let me explain this. So remember, we were using a parallel. Okay, there was a parallel, I believe it was right in here, that went up to this point here, right? So again, essentially a parallel channel. Now, as I was looking at this, I was saying to myself, okay, you breached it down here and then you recaptured it. Once you start chopping through something in technical analysis, right? And just to give you guys an example, let's draw a educational trend line here, and then I'll use my arrow tool. Well, we'll just use our brush tool. So a lot of times you'll come down, you'll bounce, you'll come down, you'll bounce, you'll come down. Once you go like this, it becomes a little bit like Swiss cheese. Now, this was only one break below and it never confirmed, but it still does a little bit of damage to the chart pattern where I say to myself, okay, Gareth, you're the expert here. Go find something that's more important than what we're just using, right? Find a better trend line that will guide you to when the market breaks down more accurately. And sometimes there's nothing, right? But it's my job to always be pushing myself. And this is, by the way, just in life, push yourself. You can always do better. I always say to people, guys, is that if someone out there is working 12-hour days, I'm going to work a 13-hour day. If someone's working a 15-hour day, I'll work a 17-hour day. I don't care. I'm going to go harder than anyone else. And that's the mentality that makes me succeed. And I know you all have it in you. If you're right here watching now, don't let anyone tell you otherwise. We always have more time. We have to make choices, granted. All right. Do I not get to go out and hang out with my friends sometimes because I'm working? Yeah. And that's a choice that I make. But I'm proud to make that choice because ultimately it makes me more successful. My time will come. And I don't mean to get off on tangents here, but, you have all this kind of mentality of like work-life balance, like, oh, well, I only want to work 8 hours a day or 5 hours a day. And that's fine. I'm okay with that. But you have to understand the difference here. I've chosen a different path. I've said my work-life balance is that in the beginning of my life of work, I'm going to work my tail off for 20 plus years. And when I'm 50 or 47 or 45, I'm going to say, okay, now I get my life balance. So I work my butt off early and have my work-life balance, meaning that later in life, I have no cares. I have all the money I need. I can live comfortably and do everything I want. Now, other people, they say, nah, I don't really want to do that. I want the instant gratification, which is fine. I totally respect that. I want the instant gratification. And instead, I'll just work a medium amount of hours and just put it in. That's okay. But then you got to work to 60 or 70 years old. And even then, you may find yourself with a little bit of you know, financial stress later in life? What if you need long-term care? What if you go, all these different things. And so the thing is that I agree with work-life balance, but we all get to make choices in life and we live by those choices. And for me, at least, I love to point that out is that you can make other choices. You can decide to have that work-life balance now when you're younger, or you can say, you know what? I'm going to grind it out, go nuts. I'm going to make a ton of money so that I can relax and do what I want later in life a lot earlier than other people. All right. I don't know why I got on this tangent, guys. These are just thoughts that are in my head sometimes. And I always like to, you guys are like my outlet, my therapy, and I appreciate that. All right. Back to the charts, guys. In any case, what my point is here on this chart of the QQQ is that you have this trend line from this high going back to June to the low here of August, to the low here in late August, to the low here on September 2nd. And this line now is becoming the optimal line where I'm going to watch. And if it breaks here and confirms, it's game on to the downside. All right. And it's actually a little bit lower than the parallel channel, which can also still be used. But I actually think this one, to me, based on my analysis, is more accurate and will give me a better guide to if and when the market on the QQQ breaks down. All right. The US dollar today. Let's talk some action on the US dollar. Here we have the dollar. Again, we've talked about the breakdown. Today, the dollar is inching a little bit lower. We're still coming into this major zone here, going back to 08. Now, again, I stressed this yesterday. Why is this telling us something so important? All right. It is telling us something so important because this is a trend line that goes back to one of the most important periods in the US in the last 20 years, in the last 2 decades. It was the financial crisis. All right. Now, again, you had COVID, which was probably the other most major market event and life event that we went through, all of us. But aside from that, the financial crisis, at least for the financial markets, was even more major. Bigger declines in the market that lasted a lot longer. And so when you're looking at trends and trend lines, you want to find trend lines that go back to major events, major events. And in this case, that's exactly what we're finding, right? We have this beautiful trend line going back here that goes back to the financial crisis. And the reason why this is important is if the dollar cannot hold this trend and it breaks the trend line, AKA the trend, then you're in trouble. Now, it doesn't mean the dollar is going to collapse. I want to be clear on that. The dollar is not going to just magically collapse one day where all these countries say, hey, we're not going to use the dollar anymore. But it would be the beginning of something bigger that probably would take 10 plus years to play out. But I would, in general, anticipate the dollar would, if it breaks and confirms here, would eventually find its way all the way down to those lows from 08. So keep that in mind. It is a major thing to watch. The 10-year yield, look at this, guys. Yesterday, we did break this level. Ask yourself, did we confirm? The answer is obviously no. You can't confirm until the next day anyways, which would be today. Right now, it's trying to recapture it. Look at this. It's trying to recapture it. It got up here on the 10-year to 4.077, and now it's pulling back. So we have to be on watch here because if yields break this level, you're heading all the way back to 3.9%. 3.9% would be your next big technical level of support. And we all know CPI, PPI coming out in the next few days. And then next week, everyone should know what that is. If you're following the markets, you got to know when the next Fed meeting is. September 17th is the next Fed meeting. All right, let's continue on. Robinhood blasted higher yesterday, a little ludicrous in general. Historically, when charts get added or companies get added to the S&P, they usually do go up. But do they go up 15%? The answer is no. In general, they don't. This is now at a point where it's basically at a double top. Whether this goes up a little bit more and pierces the highs, that's a possibility. But historically, these are tops being put in. Be aware of that. I fully expect it back down to the $100 level. And within probably a month, I think we break below 100. Now, why did Robinhood have such a big move? Now, this is really important. So when you get these meme-ish type stocks, these stocks that are very popular amongst all retail, whether it's people that are on the Robinhood app, whether they're on Wall Street Bets or any of these other places, there's a tendency now to be buying zero-day options and or weekly options. And what investors do is they buy these way out of the money call options on these names, these hot names. And what that does to institutions is it forces them to hedge. Now, how do you hedge? So the institutions, we all know, or at least I hope you know, that institutions sell 99.9% of all options contracts. All right. They're the ones selling them. Yes, you and I could do it, but do we do it? No, we don't. We generally, I mean, some of you do, obviously. But in general, 99.9% of people buy calls. We buy puts. Now, when you have a group that is buying way out of the money, the institution says, based on risk, we have to make sure that we cover our tushes, right? We have to cover our butts here. And to do that, they actually have to buy the stock to protect themselves. They basically have to cover themselves in case a move like that occurs. And they learned this, by the way, during 2021 with GameStop, you know, when hedge funds literally went bust because they were shorting this and all of these options were done and you had GameStop. I mean, literally financial firms lost massive amounts of money by selling call options, and then buyers of GameStop call options would buy them way out of the money. They'd pay like pennies. And all of a sudden, those options would be worth like $5, $10, like thousands of percentage points higher, right? And so they have to do that now. If you're seeing way out of the money, they have to cover themselves because they can't risk going bust because of if the stock actually did that. And so when institutions are buying these stocks, right, then it forces the stock up even more than it normally should. Now, what happens is once we get to the end of the weeklies, then these things oftentimes will collapse back down. And listen, I'm not saying being added to the S&P 500 isn't a good thing. It is, because it forces these ETFs that track the S&P to buy the stock. But it is usually, historically, you get about a 5% or less move, not a 16% move like Robinhood had. All right, take a look here, guys. I just wanted to point this out. Another great negative divergence on AXP, American Express. Notice high, higher high, high, lower high. So again, this would be another signal based on RSI. Plus, you have this beautiful trend line right here that AXP, American Express, is likely headed to the downside. All right, now let's talk about crypto. Now, in my portion of crypto, we're going to look at Bitcoin, don't worry. But we have to talk about where the new altcoin bull market is. Is it in altcoins? No, not really. It's in stocks that are just figuring out that if they buy Bitcoin, we saw that with MicroStrategies, but BitMine did it with Ethereum and it went up massively. Like, let's take a look at this, right? So again, you'll see where I'm going with this, but basically you had BitMine doing the Ethereum thing and going up 3,800% before collapsing back down, and is still up a lot. Then and by the way, this was about a month ago or so, a little over a month ago. Then Octo yesterday, let's get rid of that. Octo said, hey, we believe WorldCoin, and by the way, they added Dan Ives, but we believe WorldCoin could be a reserve currency. Oh, okay. All right. Well, the stock just went up yesterday from low to high, 5,500%. 5,500. Now it settled back only up 3,000%, but still insane. And then today, CWD. Look at this, guys. CWD, I believe it is Caliber. Yep. Look at this. So what did they do? They said, oh, we think Chainlink is going to be the big one. We're going to accumulate a big position in Chainlink. And what's the stock doing? You guys just saw it. Holy cow. And so, you know, this, by the way, if you go back to 2021, and by the way, this was up 2,600% pre-market here. Now it's starting to fall back down. But my point is that it used to be like Dogecoin, and then Dogecoin would go up 1,000, 5,000%. Now it's stocks, these micro caps, like $5 million market cap, like things that I could just buy and be like, all right, I'll buy that company. You know, like smaller stuff like that are now being like, oh, wait a minute. I see how this is. So if we just put like 100K into XY, let's say Avalanche or, you know, Dogecoin, whatever, then all of a sudden our stock will go up 3,000%. Pretty wild. I mean, this is wild stuff, guys. This is, and by the way, is this a top of a market? Yes. When this stuff, listen, you don't know when the top is going to be, but is this generally a sign? Yes, it is. Crazy stuff, guys. Absolutely nuts on CWD today. Caliber Co's, what a move. All right, we got to talk a little bit about this chart here. We have the chart of GDX. We talked about it yesterday. I did talk about how I was inching back into a position on GDX. I still think it's going to pull back. I can show you guys my current position here. Let me bring up and share this screen with you guys. So let me see here. Let's share my actual position on this. And so I always like transparency is awesome, guys. And so this is my I just took a snapshot of my position. So I have an average price of 67.31. Right now it's trading around 67.60 or so. And I am down 16,000 bucks. Now, the last position I showed you, I think it was late last week, I did close out for about a 50K, 75K gain. So that's good. And now I'm inching back in. And generally, remember, I'm a fast trader, guys. I'm not someone who sticks around and looks for a 20-30% drop in anything. Like literally, if GDX falls and I'm in the money $1 to $2 today, I'm going to be taking that off the table because it's a lot of money. I'd be in the money $50,000 to $100,000, right? And so that's the idea is like, once you start playing with a lot of these bigger positionings, again, you got to be careful because you got to know what you're doing. Like, could I get my head handed to me here? Sure. But again, when you're making 100, 200,000 on these positions in short amounts of time, you can afford to lose that type of money, no doubt about it. So again, just wanted to kind of show you that. And that is my current position. I'll update you tomorrow if I exit, but just suffice it to say that if I get in the money $1 plus, you can at least be sure that I'm taking some off the table on this. And again, now if it goes up, how much would I accumulate? I'd go up to 100,000 shares on this. I would go up to 100,000. The chart again to me is extremely extended, and I would expect to see that pull back. So just flipping back, holy cow, it's so late in the morning. Oh my gosh, I got to stop going off on tangents. And I apologize, guys. I know you guys probably don't mind, but I got to actually go to my trading. But anyways, the point being is that if it goes up a little bit more, I'll continue to dollar cost average. I do expect it to pull back. Gold, look at this trend line on gold. I think gold could actually pull back today and end negative. Not to say that it can't go up here after a small pullback to about the 3,800 level, but this trend line is getting my attention. Low pivot to low pivot right through there. That again would be interesting. All right, let's look at silver real quick. And I apologize, I'm having to go a little faster now, guys. But again, silver, nothing new here. It continues to lag gold, even though it's broken out. But if gold continues to go, eventually silver is going to make another move up. All right, so that's the positive for silver. As long as gold keeps going, eventually it will catch silver and silver will run. Oil today, small bounce, still stuck between resistance and support. And quickly, natural gas. And of course, I won't forget Bitcoin, guys. I know you guys, some of you out there want me to go over it. We still see this. You didn't get a great day yesterday on natural gas. Today, it's trying to push up. It's still above support now, or it got above resistance, now support, but it hasn't confirmed. If it goes up here, I would consider shorting it. But other than that, I'm waiting patiently. And then quickly, Bitcoin here. As we go to Bitcoin, Bitcoin again got rejected yesterday at resistance, but it's trying again. You do have a little inverse head and shoulders here. So I am actually 50-50 on this breaking, maybe even slightly favoring a break, especially if the stock market can continue to push here. If the stock market keeps floating, then Bitcoin's going up. And again, the chart on Bitcoin is actually a little bit of a bullish near-term pattern. And so it could be telling us that it is likely to head up. All right, guys. Wow, it is late. All right. You guys are awesome. All right, listen, one thing, I'm going to take a pause here and take a deep breath. So number one, I do this because I love you guys and I know you guys are here to learn. And I know you guys go through everything I've gone through. I got crushed early in my career on trading, doing everything seemingly wrong. I started with just 10K in account and prop firm gave me 50K to trade. And I had to work 3 side jobs because I kept losing money like most of us that are beginning traders. And I had to replenish it. I literally worked 3 side jobs in my off hours so that I could just have money to put back in my trading account, which then I lost. And then I'd have to just keep working and working. And it's the drive, right? It was my mentality of never giving up. And I know that if I can do it, you guys can do it. And so listen, you guys may not want to be day traders. You may just want to be swing or investors. That's fine. But learn the charts. We're bombarded on every side. Mainstream media narratives, hype on social media. Shut it out. Put on blinders. Focus on charts. It's not that charts are perfect. Like yesterday, I didn't think Robinhood would go as high as it did. That was not a great call. But the point being is that it gives us the ability to at least put a high winning percentage up on the board. And by doing that, we can crush it. We can make money consistently, not all the time, but consistently. So thank you for all your comments, your kind words, everything. You guys are amazing. I'll see you guys later. Take care.